Hi, I'm Anil Mittal, Director in the Industrials Group at Mizuho Americas. Today, I'm sitting down with Abhishek Gupta, who is a Group Chief Financial Officer of OYO. OYO is an Indian multinational technology startup which was founded in 2013, and Abhishek has been CFO of the company for the last 7 years of its journey. Abhishek, before joining OYO, was with Philips for about 2 years. And prior to that, he was with GE, spent about a decade over there, where he held multiple positions in finance. As a background on OYO, since its inception, has expanded more than 150,000 hotels and vacation homes across 35 plus countries in the world. With 100 million plus app downloads, OYO is the third most downloaded travel app worldwide. OYO, the company now operates as a global platform that partners with small entrepreneurs and businesses and supports them with technology that assists them in managing their operations and make their earnings better. OYO has become a trusted name brand across the world where travelers can book uh, safe and trustworthy accommodation globally. I'm sure Abhishek wore many hats as a CFO while helping script the growth of this company. I'm very excited to sit down with Abhishek and get his perspective and insights today. Welcome, Abhishek.
Thank you so much, Anil, and thank you for your kind words. It's a privilege to be here today.
Abhishek, COVID-19 has clearly been a huge impact on industry in particular. How did you see the impact on OYO rooms in particular, and how would you be able to overcome these, what I call unprecedented circumstances?
Yeah, unprecedented it is, and it continues to be, Anil. Look, I think being in the sector that we are of hospitality, right, we were among the first ones to be impacted and among the ones to be most deeply impacted, right? So when we sat down as a team and thought that what should be our focus areas during this crisis, right? We narrowed down on three things, which is care, cash, and cost, right? On the care front, we realized that we were uniquely positioned with the kind of accommodation spaces that we had to partner with healthcare providers to change the end use case of our offerings and provide a trusted accommodation service close by to hospitals for the attendants or for the patients. So we became a partner of choice with many healthcare providers. And for our regular hotel guests, we started some industry leading initiatives like contactless check-in. We have data for all the guests, and we came out with programs where you don't need to touch anything, but you can get into the hotel. We launched a program called Sanitize Before Your Eyes, where you could see which hotels were sanitized before your visit, especially, and they could also be sanitized before your eyes. Now, this might seem normal for a 3-star, 4-star, and premium hotels, but for the category that we operate in, this was an industry first, right? And similar many initiatives on the care front. On the cash, which is sort of one of my core responsibilities, right? We definitely made sure that we always had more than 3 years of runway. We were well capitalized. We raised our last equity round in March 2020, just before the pandemic, and then raised non-dilutive long-term debt that we can talk about in more detail. Managed working capital. I mean, every day was a new scenario planning. So making sure that the company was always had the resources that it needed. And lastly, cost. We were a high growth startup. We had open fronts in many markets prior to COVID. And we sort of used this opportunity to really prioritize and restructure the way we were growing, right? In a couple of fashions, right? First, looking at technology as an enabler, but actually as a front and center of everything that we do, from supply addition to customer fulfillment to all parts of the value stream. So that really structurally helped us in reducing our fixed cost and making us more scalable. Prioritize on a few markets, and where we would like to make our investments. Fixing our unit economics, right? Because we were operating at a 5% contribution margin a couple of years back, and now we're operating at 20% plus contribution margin. And frankly, as a CFO, just taking a hard look at each and every line item of cost and see where we can get some operating leverage. And look, as the vaccination rates are increasing and the subsequent waves of COVID are less intense, there are less travel restrictions. We are seeing that the benefits of some of the actions that we took during the last 18 months to 2 years are yielding fruit because our contribution margins are holding. The top line is recovering fast, and we are seeing the fixed costs stay there and seeing the effects of operating leverage. So we're very bullish and seeing we are awaiting one of the strongest summer seasons that we've seen in the recent times.
That's great. We really hope that happens. And truly unforeseen circumstances, and I'm sure very important thing, especially in the pandemic, was controls on the quality of the accommodations, right? Let's take a step back and go prior to the pandemic, during the pre-COVID days, right, when you were rapidly expanding and it was in growth space for you. What factors and considerations led OYO to expand into the completely newer markets like China, Europe, and the US? And what were the how COVID changed the whole scenario? What did you prioritize at that time? And what is the focus area now?
Yeah, no, that's a great question, Anil. Look, I think when we were growing fast in just pre-COVID, we realized that our model had a very strong product market fit that spanned different geographies. Yes, there are geography-specific nuances, but a large TAMs that these markets offered, the low degree of standardization, especially in the price points that we were operating at, and complete lack of technology made all these markets very attractive and sort of ripe for disruption. And that's why we were in that phase where we expanded across multiple markets, right? Due to COVID, we were forced to prioritize, right? And at that point of time, when we sat together as a management team, we said, okay, what are the dimensions that we analyze different markets on, and how do we choose where to put our investments and where to prioritize? So we sort of looked at two things: where we had a leading market position in terms of our supply market share or customer side market share, and what were the areas or markets where our unit economics were more clearly demonstrated and our sort of path to profitability was quicker, right? So based on this sort of a two vector approach, we sort of narrowed down on India, Indonesia, Malaysia, and European vacation homes as our core growth markets. These by themselves are very deep markets, very large opportunities. We hold number one, number two positions in terms of the storefront count in all these markets. And together now these 3-4 markets account for more than 90% of our storefronts. So they will continue to be the main drivers of our growth in the next 4 to 5 years. And that's how we sort of think about the portfolio and prioritization and investments going forward as well.
So I guess one silver lining from COVID was that you are a technology company and it helped adoption of quick technology by all these hotels, right?
It did. People were less willing to take the meetings. We launched a product called OYO 360, where you could actually sign up a hotel without even a physical meeting. The owner could upload the videos, pictures, ratings, reviews. We could import a lot of data. We could do quality checks remotely. And that in hindsight, in retrospect, actually is a great market opener, right? And gives a tremendous operating leverage when the world comes back to normal.
Great. OYO is an interesting business model, right? So where all the hotels are owned and operated by individuals, still maintaining OYO standard. How has that contributed in OYO's success? And how has it differentiated the company?
Look, we are a two-sided technology platform, which is truly asset light and scalable. And a core value proposition for the hotel and homeowners, we call them patrons, is to be able to provide them a full technology suite, which can help them increase their revenues by almost 2x versus the independent hotels, and also ease their operations, right? We take complete ownership of revenue management, pricing, content, third-party distribution. We also sell on all the third-party channels like Booking, Expedia, Airbnb, and we also provide a front office hotel management system on a tablet or a mobile platform. So this end-to-end integration is something that sort of was not there, and helps really simplify life for the owners and operators. I mean, last year, 71% of our total revenues came from direct OYO channels, which is OYO app and OYO website, and 29% came from the indirect third parties. And 78% of our guests were repeat or organic users. So if you put together the power of a full stack technology, a loyal patron base, and a strong growing guest base, right, which is booking direct on your platform without any intermediaries, that sort of forms a pretty compelling proposition. And all our patrons are exclusive to us. So there's a strong lock-in, and that offers us the ability to offer the best available accommodation at the best prices to our guests. So the two-sided network effects of that platform makes us a uniquely positioned and compelling business model.
Amazing, because the loyalty of a customer was towards OYO brand rather than to that property in many cases, right?
Yeah, and it's fungible, right? Because people who travel, like we used to travel before COVID, and maybe you were traveling, right? They know the brand, and people would actually decide on the same day which city they were and what time their meetings were getting over, and then fire up the app and book a stay. That's the time when they decide whether to fly back or stay in the same city, depending on when and where their meeting ended. So that kind of local use cases really opened up a new TAM for us. Similar to how ride hailing changed the market, right? Earlier, you would have your assistant, book a taxi cab from the taxi company if you had a flight in the morning, and then you have to wait whether they arrive on time, etc. But today, you don't think twice before firing a ride-hailing app, right? We saw the same behavior change in India and other markets in Indonesia, where we were deep, and we would see more than 70% of our bookings coming on DD-1, which is a last-minute use case, and hyper-local use case, with more than 50% coming from when people have reached the same city. So when you see such trends, that really opens up the market to new use cases, and it redefines the TAM in a manner that was unthought of before.
When a company like OYO is growing, of course, the growth is multidimensional. OYO has a large footprint with operations across the globe. When you were growing, how did you tackle regulatory issues which arise naturally from operating through the globe, across the geographies, countries, and jurisdictions?
Yeah, no, it's tough. And as a CFO and somebody, along with my partners in the general counsel, right, as people who are in charge of governance, right, it is a big responsibility. And so you acknowledge that the importance of it. You acknowledge that you need to have people who are smarter than you, who are going to be able to help you through this. So first is the tone from the top, right? To make sure that the management, the leadership team is aware of the things that we're not aware, right? And making sure that you have, whether through in-house experts or a network of trusted advisors, the big four firms or the law firms who know the nuances of each market, so that they can set it up properly at a design level. But then it doesn't stop there, right? It has to be monitored on an ongoing basis, reported to the audit committee. We have a wonderful audit committee chairman in Dr. Steve Albrecht, who was the president of American Accounting Association, has been on 12 corporate boards, and was a trustee at FASB. We have Troy as a board member. Troy spent 24 years at Starbucks, retired as the chief operating officer. So people who have seen global operations, people who have seen complexity, to help guide us, steer us, and ultimately it comes to PPT, people, processes, and technology.
Right. I mean, the first P is very important, people, because dealing with four different jurisdiction comes with four different cultures, right? In China, India, completely diverse, Europe, and then US. Of course, you had your own challenges dealing with different types of people and different types of backgrounds, right?
Yeah, building strong local teams, Anil, that is key, right? Local teams who are achievers in their own right, who understand the market, but also hungry to work with the next disruptor. I think that has been one of the biggest strengths of OYO is to be able to hire and retain and motivate top quality talent.
This is a sensitive question. OYO had its own share of negative press, and you had to deal with it. In the time of, especially when there was international economic upheaval with the pandemic all across, you had to deal with this, and there was a real chance of losing confidence of many investors, right? How did you deal or reassure the investors, and how did you manage that press which could have adversely impacted you?
Yeah, I mean, look, we've had our share of negative press, right? And we believe that the only way to, to continue to win the trust of the investors is to be direct, upfront, and honest in our communication with them, right? And if you peel the onion a little bit and analyze the source of negative press, one of the biggest themes that you would see is about the reduction of our scale from some of the markets that we had expanded, faster pre-COVID. So in all on our investor dialogues or internal shareholder dialogues, right, we spoke a lot about prioritization, right? This focus that we spoke about of the two-dimensional approach of market share and unit economics ultimately helps our leadership position in those markets. And investors, see and understand, what we were doing and what we have been able to accomplish. Today, whether you see our strengthening leadership positions in our core markets, whether you see our continuously improving unit economics, which are sort of operating at steady state levels already, or significantly reduced, EBITDA burn, all of those are actually the outcomes of the same actions which sort of generated the negative press. So when we put this in context, clearly in front of the investors, I think they appreciate it. And most of the conversations have been, you guys are doing the right thing, and keep up with it, and keep your head down and executing. So that's what we've been up to on it.
Great. I think there was a tremendous success navigating through that time period when there was a negative press. One thing is OYO became the first ever Indian company to raise capital in the US term loan B market. Congrats for that. Did you face any challenges while executing the first of its kind deal in the US? Any lessons learned which you can share with us?
Yeah, look, it was a big learning experience for the company and for me personally. We had mostly done equity capital raises from venture capital investors or private equity investors before this. We became the first Indian startup to be rated by Moody's and Fitch, the credit rating agencies. We became the first Indian company to access the US leverage finance market using this product. After that, a couple of other Indian startups have followed this and used this product. I think this is a good source of long-term, non-dilutive capital for pre-profit companies. It is covenant light with minimum maintenance covenants, and is also for a private company which is still preparing to go public. Since it is a privately placed transactions, right? Then it helps in the kind of disclosure requirements. I think the biggest learning for me is that the credit investors and the rating agencies look at a business in a very different manner, right? And they're always looking at the downside scenarios, and they're the key for the CFO or the team or the management team is to give comfort to them that the there's a path to profitability, which is in the near term. And then obviously there's an ability to repay and all the things that they look at, right? The other thing as an Indian company that we faced a challenge was in structuring, right? Because there are several regulatory constraints around how you can package security structures. So this required a lot of first learning on our end, but then also investor education and structuring with different experts and our merchant bankers. And I thank Mizu for being part of that journey.
Oh, we were happy to do that, and good luck for future raises of capital as and when needed. OYO has been planning a highly anticipated IPO for some time, and especially in the times when markets have been really choppy and constantly changing. What challenges have you faced so far, and how has your plan changed over time on that account?
Yeah. Look, we filed for what is called as a draft red herring prospectus (DRHP) in India to access do an IPO in Indian capital markets around on September 30th last year. It generally takes 3 to 4 months in a normal scenario for to get regulatory approvals. This last year has been a year where the markets and the regulator has been chock-a-blocked with the number of transactions that were coming through. So after that, we did some preliminary marketing, and we received very good interest levels, I think, from the investor community. The investors were very happy with the kind of transformation that the business had gone through and was going through. And they were also seeing the early effects of, whenever a new wave of COVID would subside, the immediate impact, positive impact it would have on our growth and operating margins was clearly visible for the few quarters in which we operated without a new wave. So we received good interest levels. This was until December, right? And then suddenly, people went to bed for Christmas break and maybe woke up on the different side of the bed, and markets changed, right? Whether it is inflationary concerns or the overall change in people's perspective about the tech valuations, and then more lately the geopolitical situation. Look, I think there are things that we can control, and there are things that are beyond our control. So at this point of time, we are watching the market very closely, and at the same time working with our regulators to work through the regulatory or necessary approvals, because the new age tech companies are also an evolving situation for the Indian capital markets. So I'll tell you the good part, right? The good part is that our shareholders are very, very long-term in nature, right? There's no urgency of any liquidity requirement for them, and even if we were to do an IPO, we would not have any large secondary transactions going through in those. And then from a company standpoint, from a primary capital standpoint, we are very well capitalized and fully funded to our path to cash flow break even and beyond, right? Our monthly EBITDA losses are a low single digit now, and we are fully funded. Therefore, so there's no immediate need per se, right? We were looking at this as a branding opportunity, as an opportunity for the company to expand further, but we have enough resources to fund our growth plans in the next few quarters. So net, we're watching it closely, and we'll see if the markets become constructive. If they offer an opportunity, then we're still keen to go out, right? And if otherwise, we're just keeping our head down and executing and taking benefit of the reopening trade, as you guys call it, right? And it helps us deliver a few more quarters of strong interest, and then build more conviction on the business model.
Abhishek, this is an amazing story. When I hear about this, it looks like it's been probably 9 years, but it seems like decades in the making. Wonderful growth in the business, wonderfully navigated across the world, multiple jurisdictions. It's a mix of strategies, mix of finance, it's mix of regulatory issues, it's mix of media, and trying to raise capitals across the jurisdictions. Amazing insights. Thank you so much. It's been really wonderful speaking with you and getting your insights. I truly appreciate you taking time, and very good luck for the continued success. Thank you so much.
No, thank you, Anil. I think I think we are fortunate in some sense to have a visionary founder, Ritesh, who set up OYO. Is I think when he was 17, now he's 26, right? Set up a bold ambition and a tech platform which was disruptive, and then build a team of people who joined OYO ahead of the time when the company needed them. And those kind of leaders came in together and have been with the company all through this thick and thin. We have not lost a single C-level executive all through this journey, right? And that helps us reinvent ourselves, every time. And I think at this point of time, I believe that we are uniquely positioned to capture the growth that is in front of us, and I'm very excited and thankful for this opportunity to be in this company, to be able to interact with some of the best people, best professionals I've ever met in my life, and then to be able to work with advisors like yourself. Thank you
so much for saying that. Thank you so much for your kind words. We will always be there. And then good luck for your future interviews. Thank you so much, Abhishek.